so bear with me, everyone. Got it. Got it. Well, welcome everyone. First off, for those of y'all who are joining me on YouTube, and of course, everybody I just kind of already talked to in the class itself, welcome and thank you first and foremost for being here. Bear with me when I move the Safari out of the way. For those of y'all who don't know, welcome to my channel. This is the kind of trademark by Forex channel. We go over quite a few different strategies, indices, Forex pairs, and the lot. But the only thing I really do live on YouTube is go over simplicity. Eventually that will change as time goes on, but for now, that's where we're at. With that said, obviously we have to go through the disclaimer first. I would have this edited better if this wasn't live in a class and on YouTube, but very, very simple. These are recorded for future education purposes. That means you are recorded as much as I am. So if you're not comfortable with that, by all means, hop off. Nothing is considered legal, financial, or investing advice. And last but not least, I practice high risk, high reward trading. You can follow similar steps with safer, lower risk, lower reward trading styles, pairs, lot sizes, brokers, leverage. You have the world is your oyster, so make it so. Do your due diligence to get to where you want to be, learning those really nitty gritty details. How to compound. Again, this looks really simple for those y'all who have seen this before, but compounding to 5, 6, and 7 figures is not that hard. It really is. And it comes down to some good rules, some basic management, and consistency. It comes down to patience and not jumping ship every time you get your feelings hurt. So that's kind of the hardest part, in my opinion. Are there any questions on any of that thus far? Let's see, I'm going to move this down here. To be here, and that disclaimer, right? That's important, Kenyon. Honest to God, like seriously, it really is. Okay, I'm going to stop that share. Before we move forward, I'm going to share this screen. I'm going to say share 100 times again. That's fun. But here we go. I keep track of the pips that we get in classes. I keep track of the pips. I do a lot of things. This spreadsheet's the only one I use for public purposes, but you can tell first and foremost, this is simplicity. So this is the good, the bad, and the ugly, including, actually this shouldn't be here. I don't know what that is. What am I doing? That's right, 26. That's the right date. Okay, so you'll see here in a couple of minutes that I'm going to go over the 4 trades we looked at last week. Not last week. This was on 10/19, which is 10/20 on MT4 time. We looked at USD CAD, CAD Chef, Euro CAD, and GBP CAD. So first thing we're going to do is review those trades. You can see 4 trades total, 2 lost. That's just the market. It's kind of been the market for the past few weeks. We've had some extreme pushes from several pairs, but you can also see the good, the bad, and the ugly, right? 12,000 pips from literally taking trades for 20 minutes here and there once every 2 weeks, right? Once every 2 weeks, every other week, give or take. It's supposed to be the first and third Tuesday of the month. So not a bad way to be, considering this took us 20 minutes to find. Could you imagine what's possible if you actively grew that skill set, did this every week, managed appropriately, and actually like compounded this? Because this is an insane, this isn't by itself as 6 figures with losses. This is by itself as 6 figures. So just to kind of give you a breakdown of what that actually means to your life. Right now, you might be seeing dollars or cents in terms of how you're trading, but that's just your lot size. Remember, it's the same skill that's going to pay you the 10 cents. It's going to pay you the 10 million. It's going to pay you the 10,000 or the $10 or the 1,000. So same skill set, just different lot size, and obviously money in the account. But have to show you that just for my disclaimer purposes and to show you what we're doing and why. And now I'm pretty sure, let me make sure this other part of my broker is off, my VPS more accurately. Here we go. And ta-da. So now in theory, you guys should be able to see a small corner of my VPS. So let me put back up my other stuff so I can actually manage what else I'm going on in life, right? Like we talked about for a brief second, I'm going to go over on 10/19. That's the date on our calendar, but technically it's 10/20 at the 1 o'clock candle. That's live. It's recorded. It's public on YouTube. Can't take it down. Can't change it, right? It's there. So I'm going to go over those 4 trades, which were pretty simple. We had USD CAD, 1 hour time frame. We were waiting for the buy. This is one of those that actually won. So if I go to the 10/20 candle, the 1 o'clock candle, that's all we were looking for, was in and around here. We said the break of the trend line on this. which it's recorded. So you don't have to listen to me. You don't have to trust me. Go look for yourself. Total of about 92 pips, right? I got 82 out of that. I didn't get all 92. But still, to kind of give you an idea, beautiful trade. We said we take this at the break of the trend line, not the fractal. That's recorded. Go back and look at it. So overall, that was one of the winners. Let's see, let me turn that off the watch list now. Next was CAD Chef, also a winner. We were looking for this to sell. We were saying the break of the fractal from the 10 o'clock candle, or the 10:20 candle, UTC time more accurately. That's right here. The break of the fractal, as soon as my crosshairs would move, would be anywhere from here or here, right? Either way, let's go with the latest point. You still got your 115 pips out of it. I personally got 119 from my entry. Not a bad way to be. Just good management. Remember, if it hits at least one ADR on the 1 hour time frame for a 1 hour entry, hitting one ADR, that's a winning trade. At one ADR, you should be protecting or locking profits no matter what. This is not a perfect system, but you don't need to be perfect to be profitable. That's what I'm hoping to get across to people. So that's CAD Chef. I'm going to take that off the watch list now. I'm going to hit W on this cool little fancy tool. Go here, EuroCAD. EuroCAD, if I zoom out, you guys can see huge move down, and we have consolidated for almost the same length of time. So enormous amount of time. If we measure this, that's 1022. It's 396 candles. That's insane. So 922. That's a whole month of a downtrend, and almost a whole month also of pure consolidation. So that's 32 days with 325 candles on the 1 hour time frame. Again, going on a whole month. That's 2 weeks, 2.5 weeks, give or take. We have literally sat still. So ugly view, we know that. But let's zoom back in so we can kind of see where we're looking. EuroCAD buy was what we're looking for. 1020 candle, which is in and around here. This is the candle that I got wicked in on, because this is the candle that broke those fractals. This one right here. We broke here, I was in. This did inevitably give us, 55-ish pips. But as you can see, we set a standard. So I want to maintain that standard when we're right and when we're wrong. So we technically gained 55 pips on this, but if you didn't have it managed, and my rules are pretty simple, I need to hit at least one of the lowest ADR according to this indicator or the bar alert indicator. I don't care which one you use. Right now, this one's the one on my chart. As you can see, we didn't hit the lowest ADR. So that's not valid for me. Even the 55 pips we technically were in favor, didn't win. That's a loss. So, I'm sorry, on that one I lost personally 82 pips. So GBP CAD, last but not least, same kind of story. If I zoom out, make this ugly, huge move down that lasted literally a month. We have sat still for 2/3 of that time, 1/2 of that time, and just really stayed in this zone. So on the 4 hour time, we're forming this beautiful double bottom, which is kind of awesome, but still not in the position to be where we need it to be just yet, unfortunately. So that's GBP CAD, GBP, and this one didn't have any profit, I don't think. I mean, this one stayed out of profit altogether, literally, because you got it at the very latest point, and then of course it was turned around instantly. So 1019, we're going to 1020. So this was the time frame that we're looking right here, which means we were waiting for the break of this fractal. That didn't happen until over here. You got almost no pips, and then it went against you entirely. So my stop loss on that, I had 93 pips of a loss, which is just slightly below this area. That's a losing trade, fair and square. That's okay. The first thing I want to point out when we review those trades, guys, is we're not hiding the losses. I'm sure Simplicity particularly had a ton of losses in the last week or two because it's a reversal based system, and most of these pairs have been trending hard. So when pairs start trending hard and you're trying to reverse, the market doesn't care about your opinion or mine. The market's going to keep going where it's going. So with that said, that answers the trades that we called, or that I'm not called, but I looked at live 2 weeks ago. Now, before I move on, I'm going to say today is November 2nd. It is 8:15 Eastern Standard Time. On my desk, I've got a list of actually 15 pairs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15, not 14. So a total of 15 potential trades. Okay. The reason why I'm going to pause here, and I hope that you guys are a little more chatty, like more like the morning group, but I want you guys to, I pray that you hear this. is, listen, you can't take all 15. Number one, even if it was an NFP week, you can't take all 15. Even if you did them all at 1% risk, unless you have a $15,000 to $20,000 account, not very likely, not very viable for almost any parameters. So you can't take all 15, number one. Number two, you can't be in all of the JPY pairs. You can't be in all of the USD pairs because then you're over leveraged per currency. Like there are 6 in total Forex pairs that have the US dollar in them. You can't be in all of them. You have to pick your 1 or 2 or 3. I mean, 3 would be the highest amount, and then leave the rest. Yes, you risk the possibility of, hey, I picked these 3 and these are the 3 of the 6 that lost. That's real life. I have no control over that. You do the best you can with the information in front of you and you move on. You can't over leverage though per currency. That's a really bad way to be. You can't over leverage your account per dollar either. So that's 2 reasons you shouldn't not take all 15 of these trades. Third reason is it's NFP. I'm not going to go into the fundamental details of everything that's going on in China and the stock market and the cryptos and whatever else because I'm not qualified, first off, to do that. Second off, I don't reliably use that information to be a successful trader. And third off, I feel like you can have a lot of success with technical analysis on its own. So with all of that in mind, I'm going to take a look at all 15 of these pairs. If you don't have a pen and paper, make sure you have one. I've got a ton of messages on YouTube and on Telegram saying, okay, so I have simplicity or I'm in the group. What do I do that you do? So the first thing I'm going to do before I move forward, and I hope that Donna earmarks this in the description, is tell you exactly what I would do with simplicity. I don't know if you have the Swiss Army knife, but if you don't, it's on cooltradingtools.com. By all means, get it. If you don't have access to this, there's an indicator called the bar alert. That's the one that I use that will tell you the ADR values per 5 days, 4 weeks, and 12-week periods, right? You need some amount of information that will tell you the ADR. That's the average daily range. If you're trading the 1 hour or above. If you're trading less than the 1 hour, you need some kind of viable information that's going to tell you what the ATR is. That's the average trading range for the pair that you're on and the time frame that you're on. So I don't care how you get that information, but you need to get that information. In the advanced membership group, of course, we have those couple of free indicators that show you that stuff. And of course, the Swiss Army knife also has that too. Just that's what's on my screen currently. But yes, you need that, period, end of story. So that once you have that and you've got simplicity, here's what I do. Literally, if I come to my charts once every other week or so, I see these big standing trends, I see a simplicity signal. All I'm waiting for is a confirmation of that signal. I'm not going to just take the buy because it tells me to buy. I still need it to break the area that I got the signal from. For example, a break of a fractal would count as a break, number one. Number two, my stop loss is going to be below structure, wherever the lowest point is, plus some room. So if your account can't handle this big of a trade, you should not take this trade, period, end of day. That's not because, it doesn't matter what that number is. If your account can't hold it, you shouldn't take it. Because if your risk parameters are right, it doesn't matter what this is, period. As long as your reward is bigger than your risk, you're in a good territory. I mean, in theory, right? Last but not least, on the 1 hour time frame, I'm only going for the smallest of the ADR. And the reason why I'm saying the smallest is because these numbers constantly fluctuate, but we're not going to get some dynamic fluctuation of the smallest number in a 2-week period based off of a 12-week number. So with that in mind, if I'm always going off of the smallest number of the ADR, then we know that we're always going to be within that realm, within the realm of possibilities of what it was 2 weeks ago. It keeps us honest. It keeps us accurate. That's why I'm using the smallest. Otherwise, if it's your personal trading style, I would definitely be going for any of these. That's totally fine. For reliability and consistency in terms of duplication and these calls, I go for the smallest number just so people can see it and hopefully duplicate the results that I'm getting. Last but not least, you can use ATR. ATR is much more valid. Going for 2 or 3 ATR is going to give you very, very high probability trades. It's going to force you to tighten up your stop loss a little because you can't have a big fat stop loss and a 60 pip take profit. But the majority of these trades we look at on the 1 hour time frame, they're good for 60 pips. I mean, they're good for 50 pips very, very easily, with the exception of the extremely slow movers. So that answers everything. How I'll hold them, pretty simple. I place the trade, my stop loss is very large. And of course, I'm scaling out anything past 50 pips or one ADR, right? I'm scaling out and protecting that position, which means if this runs for 500 pips, I can still catch some of it, but I've closed a good portion of my trade at that one ADR, or I have protected my trade at one ADR. So now no matter what happens in the market, I collected my money. I've got my account kind of safe, and now I don't care. Win, lose, or draw, it doesn't matter to me at all. So that's that. Anybody have any questions on that before I go look at these 15 potential setups? Let's see. Hey, Lucas.
No, you're good, Jen.
Thank you. Okay, cool. So Lucas is the one who said we're good. I'm moving on. Again, you guys can put your stuff in the chat. I'm gonna give you this. I'll mark it up on here so you guys can see it visually too. But this is a pretty big list. So starting from the first one, check this out. I need to zoom out so you guys can see the bigger picture. And I know for the YouTube reviewers, you can't see the candles. I'm not trying to see the candles right now. I'm trying to see the overall move. So when I want to see the candles, don't worry, I know how to zoom in. With that said, huge move up. We have lost steam, right? If we zoom in and now look at the candles, we've got a double top formation and we've made our impulse. So you want to be a stress-free trader. A approach to the market would be take your trade and deal with the good and the bad that comes with it. But doing so leaves you a pretty fat stop loss on a pretty slow moving pair. You might not want that. At the end of the day, you have to make the decision for yourself. What I would do is you have your impulse move, wait for your correction and take it down. So that would mean you're entering somewhere in and around this area, right? Anywhere in and around this area, retesting 50% of that impulse. Because remember, impulse, correction, continuation. This is going to give you a great entry. Again, you're only going for one ADR and then you're letting the rest run. You've got your room on this trade from here, from where you're going to correct to, because price broke out. It's going to come back up to retest where price broke out before, which is somewhere in and around this area. Could be slightly more or less, but that's the zone to kind of give you a really simplified view down to where price broke out before. That's 3 ADR. That's a really good risk to reward ratio. So not a bad way to be at all. So that's what I'm looking for on odd USD is a sell. Before I continue, again, anything you do with the US dollar, you have to realize that it's NFP week. The market can do a billion things. A lot of these pairs have been trending pretty hard. It stands to reason that we could just get a pullback and a very long-term continuation on the buyer side. Very, very likely. Look, if you look on the other time frames, you've got a valid W on the buyer side for the 4-hour time frame, same pair. So there's going to be a counter argument on every single one of these trades. So when we say we're taking all of these potential reversals coming up, we know big moves are going to happen this week. It might hold pretty flat until after Thursday or Friday, or till the first kind of pre-news release on Wednesday. But either way, is even looking from this view, 4-hour time frame, Australian dollar, even from where price is currently at, let's see, that's still 120-ish pips. If you only get some of that, I'm sorry for my mouse moving around, even just to come down and retest kind of this area, this would stop freaking out on me. Let's see. Not a bad way to be. That's only half of an ADR, but that's a high probability target. Very, very high. And that's the latest possible entry. Otherwise, staying on the 1 hour, staying as simple as possible. Huge impulse, you're waiting for your correction, continuation. That's it. This impulse is enough to say, hey, we've got the room to come down a little bit. Not forever, just enough to get your pips. So that's odd USD. NZD USD is next. Comparable setup, huge uptrend, flat top, double top. We've got the impulse breakout, right? Breakout. We've even corrected mildly. So this one is one of your kind of more totally at your own discretion. That's your impulse. We've made a correction. If you want this continuation, by all means, you can wait till the break of the fractal, which is kind of our standard that we do on these calls, is wait for the break of the fractal. I don't think we're going to come back up much higher than this. So to kind of show you where price retested where price stopped before. If you guys can see that zoomed in. That baby candle retested where price stopped before. So we've already kind of got our retest. Same kind of concept. Can we get at least 180 out of this? That's easy money. Very, very easy trading. You don't even have to know everything. It's 120 pips down to the center of there to get your first ADR. Really, really easy. Anything above that, you're lucky, and protect your profits. Very, very simple. So that's NZD. There's a lot of these. This might take me a long time. I didn't really think this through, did I? USD CAD. Same thing. We looked at this buy. We actually took a loss on this. Well, I took a loss on this more accurately 2 weeks ago. Baby loss, kind of break even for this strategy, for this account per se. Still not a bad trade. You've got this W forming, right? 1 hour time frame, huge move that has yet to be retested. Every single one of these are reversal trades, which means if you're trading against the biggest momentum, you are protecting these trades pretty quickly. So in this case, for this call being NFP week, I'm even going to write it on my note. So when we review this in another call, you are protecting, okay, at 50 pips. You get anywhere near 50 pips on these, you should be protecting your trade. It's just a really good practice, especially if you're new and you're not yet profitable. It's a phenomenal practice to help you become more profitable as you gain the viable technical analysis skills. So that's USD CAD 1 hour time frame, buy signal, double bottom, waiting for the break of this fractal. Take it up. You know exactly what you're looking for. You're looking for about 75 pips on this. Overall, at the break of this fractal, I'm looking for price to come back up where it broke out before. That's almost 2 ADR, so 159 pips. This is recorded. By all means, come back to it for reference. See if we hit any of these targets. And we haven't been too wrong too long. So now the controversy for all the JPY pairs. For those of y'all who know, the Japanese yen had a bunch of stuff going on. I'm not going to dare get into fundamentals and speak on that. By all means, check my FX book, check all of your news sources to find out what happened, when, and why, or what the future holds for that news release and why the Japanese yen currency was devalued. With that said, the money still has to move, right? The market has to respect some amount of rules. Does it have to? No, it can technically go up forever. We know that all of these JPY pairs made some major moves. But if we look at what USD JPY did, 4 hour time frame, impulse, correction, impulse, and now of course we're failing to make higher highs. So we pushed down to this area a couple of times. Can we swing back up to make one more wave? We absolutely can, which is why we wouldn't take this trade until it broke out of this kind of consolidation. But 1 hour time frame, you've got your sell signal. I'm going to zoom in now. Beautiful sell signal. We need to break this whole area though. We don't want to just take it because we got the sell signal. We want to take it when we actually break this whole area. We need to get out of this consolidation box. If you guys can see that, don't just take it all willy-nilly and get stuck in the middle of what you can already see as consolidation. So you've got your simplicity signal, sure, but wait till you break out below this area. So this is a later entry before you take this trade, or you can of course go to a smaller time frame and look for a faster entry. But that's how I would trade this. Again, same concept. I'm going for about 50-60 pips on this. The lowest of the ADR numbers, you're looking for about 58 pips. Definitely safe way to be. If I zoom out really ugly, you can see where my targets are from where price is currently at. That's 300. I don't know if we're going to get all that on here. 170 is a hefty target. I figure 1.5 to 2 ADR, so I'm okay with that. 75 to 125 pips, I'm okay with. Remember, it's NFP week, and there was a whole bunch going on with the Japanese yen. So with that in mind, I don't need to break the bank. I just need to collect my safe pips. So trade this very carefully. If you're not comfortable or kind of a more experienced trader, don't go selling this just because the simplicity said so. I'm sure the last few weeks on any reversal system that you have been not as pretty as we wanted just because the things have been trending so much. So take that with a grain of salt, but something to consider. Hey, Mark,
I'm
are
on
you
a live seminar right now. I'll call you back when it's done.
Hey, Mark, I muted you. Just so you know. I hope you weren't. I think you're on the phone. But that's okay. USD JPY. Let's go to odd JPY. There's a lot of them. Like I said, guys, I could be here all night. There's so many pairs. So again, I've got to zoom out to show you the bigger picture. Did you have a question, Mark?
I'm going to wait. I have a question. I'm going to wait.
Are you sure? You can ask me now. Go ahead.
Well, you say this is a reversal-based system. Can you speak a little bit about that?
So simplicity is a retracement or reversal based system. So it's basically trying to calculate when the market's going to turn around. That's what simplicity is. It's not telling you when the trend is happening, it's telling you when the counter trend might start.
Okay. I understand it now.
Gotcha. Thank you for your question. Okay, so odd JPY, similar with the other JPY pairs, guys. There's a lot of these. Like I said, you've got a triple top forming, you've got your impulse, and then those zoomed out. People don't like it. I get it. But zoomed out, impulse, we're waiting for a correction, continuation. Very, very simple. The reason I have it zoomed out is because this has moved so stinking much that we have to zoom it out to show you what exactly we're looking for. So overall, going for 2.5 ADR on this pair, great potential setup. So if we zoom in now to get a better picture, impulse, we kind of had a pullback, but not a really significant one. This isn't a retracement. This is barely a pullback. So let's define this as not a retracement. Retracement would need to complete quite a bit more of that. So this is a baby pullback. We know that. Do you want to wait for a bigger pullback till we have a steeper move? You can. You can wait till we have a better and tighter stop loss. But again, great potential sell happening or kind of setting up on JPY. You're waiting for a break of a fractal though, for sure. No matter how we look at it, any call you're on with me for this strategy, that's bare minimum. It's either break of a fractal or break of a trend line and nothing less than that, no matter how you're looking at this system. So let me clarify that. CAD JPY is next. Look at all these pairs. Holy cow, we haven't had this many pairs in forever. I'm gonna zoom out again because, well, look at this. Big, huge trend up. This happened for weeks and weeks. Let's see, that's 9/21 to almost the end of October. So 51-hour candles, right? And now since then, we've failed to make higher highs. We've also failed to make lower lows, in all fairness. We wicked down, and right now we're kind of sitting in this box. We're sitting in this range. We don't currently have a sell signal, and I get that. The market's consolidating. So this was our sell. It did not pay for itself yet. We even got a buy signal, which again did not pay for itself yet, because we're literally sitting in a consolidation box. So with this box, nice impulse, right? We failed to make a lower low though. So we're not going to take this all willy-nilly. If you want to take it at the break of that fractal, you can. I would suggest probably a tighter stop loss on this one if you're going to be trying to take it this close. Otherwise, wait for the break of this entire area and get your safe 1 ADR and go on with your day. For these JPY pairs, I'm waiting for the break of the entire area, not just a single fractal. So take that with a grain of salt. There's that. Shift JPY, this pair is fun. I'm gonna zoom out one more time. Well, not one more time, but to show you this enormous move up, right? Huge, huge move from September 20th all the way to now being November. That's 729 pips. So a 300 pip move down, very, very easy. It's in the bag, but we're not confirmed yet to take that move. So I'm gonna zoom in, show you what we're seeing. Nice impulse. We're not correcting just yet. We're still staying above where this consolidation was. So we do need to see a nice impulse, a correction, and a continuation to go get the rest of these pips. So anything above 68 pips, that's 1 ADR that trade is paid for the 1 hour time frame. If you want more to milk it, again, protect your 1 ADR and let the rest run. Getting that 200 or 300 pips out of it, that's fine. But at least make sure you're protecting it the first ADR for sure. That's Chef JPY. Holy cow, there's a lot of these. EuroCAD. EuroCAD was the one that we took last 2 weeks ago. Again, we just got stuck in consolidation. We've made another double bottom. We're waiting for this breakout. We're waiting for the retest of this major trend. That's all we're doing. This is again a reversal based system. Come back over. We're waiting for the reversal back up. Most recent simplicity signal is sell, but this one has not been paid for. You're going to get duplicate signals like this when you're in consolidation. That's why you have to make sure you still know what you're doing, at least to some extent. You're not just taking it because of the signal, you're taking it at the breakout, right? You're taking it at the breakout, which you don't have yet. So overall, waiting for the buy, you can of course take it here. I would be much more confident with you taking the fractal on any of the non-JPY pairs, but JPY pairs, make sure you wait till the break of the actual formation. That's going to be huge because JPY is overall super heavy trending. That's another one, beautiful, lots of pip potential. I'm looking to get like 200 or 300 out of this one still, I think. That still has not been paid for. I think it's 200 is my overall. The more price is currently at, that's 360 pips. I'm not going that high. I'm going a little shy, more around this area. For those of y'all who know me, you'll know I use the line chart on the 4 hour so I can stop having to zoom in. Anywhere in between these two big pullbacks, that's a great target. So down into here, beautiful target. The more price is currently at, that's your 300 pips right there. Beautiful, easy to read, no questions, but we still need the reason to enter. So take it with a grain of salt, do your own analysis. Great potential trade set up there. This is fun, lots of fun. I don't think I like talking to myself that much. I haven't had 15 trades in a long time, guys.
I feel so bad.
I know, right?
So bad.
You should feel bad, Lucas.
I do. No, I do. I absolutely do.
It's lonely. Well, anyways. Okay, a couple more, and then I will be done rambling, and then y'all can ask questions, hopefully. EuroCAD, we just went over. Euro Chef. Holy cow, guys, this is a ton of trades. Big impulse down. I like this one based off of the candle formation, so I'll kind of show you. Look at that beautiful potential head and shoulders. We break this neckline, we're simply going for a measured move. So the break of this fractal, that's 58 pips. Notice the ADR. You're going to measure the smallest of the two sides, right? So on this one, I'd have to actually protect it a little bit differently. And this is recorded, so by all means, hold me at my word. Come back to this recording in 2 weeks and say, how did this fare? It's hard to see how it fares when you like micromanage and hyper vigilantly just monitor your trades and you're freaking out and you're emotional. But if you actually come back and check them every so often, it's a completely different view. So this one right here, I would be protecting much sooner than the 180R based off of a candle formation for that reason and that reason alone. Otherwise, you've got a baby trend line here. We're not going to wait for the break of this trend line. We take it at the break of this fractal for the purpose of this formation. Again, you'll be protecting this one at about 30 pips. You're definitely protecting when you get to 45 based off of the ADR. You're not looking for this to turn around forever. I would be looking for something like this. Pull up, anywhere from 80 to 100 pips, pull back, one more push, and then potential if we're going to continue down, that's when we're going to get our downtrend continuation. So Euro Chef, Euro NZD, beautiful. I like this one because of the impulse. So this is a ton of trades, guys. Big trend down. We've consolidated. We've even busted through and made a lower low. But we've got our impulse. We've got our correction. We've got every reason to say, okay, now we've got the room. This one has a much higher ADR, so your stop loss is going to be more expensive. Notice the pair is not worth as much either, though. The pair is only worth $7 versus $10 per pip. So stop loss figure, that's a big stop loss, guys. If you take it right now, that's almost a 100 and what is that? That's testing my vision. That's almost a 200 pip stop loss on a Forex pair. That's crazy. But either way, you're going for about 300 pips on this one. That's how I would be trading this. You're protecting anywhere around 121 pips. That means your trade is protected. I'd probably be protecting a little sooner than that. That's just me. Otherwise, you've got a high probability, good risk to reward trade. That's all it comes down to. The whole purpose of simplicity is for the people who don't know everything else, who don't know technicals or candle formations and price action and things of that nature. It works great in conjunction with more knowledge. But I think one of the reasons Uncle P created this was to help the people who maybe didn't come to the market with a lot of knowledge, didn't have the ability to see what they were trying to see. So GBP odd, another beautiful trade. We've got our buy signal, 1 hour time frame. You've got your buy signal and you've also got your continuation. And I love that an awful lot. So for me, I break this fractal. My target's going to be about 100 pips. I know exactly what I'm going for. We've got our impulse even. Let me get my crosshairs out. That's 178 pips. That's 90, right? I'm going for this area, this hot box zone. The Fibonacci box essentially is all it really is. anywhere in this area, you've got your pips kind of protected. You're going on with your day. Not a bad way to be. But you need to point out that this big impulse hasn't been fully corrected. This is kind of a hefty price to pay. If you're not comfortable with that price, wait for a pullback and then take your trade. If you want the stress-free kind of, what can a little indicator do for me? What can a simple strategy such as this do for me? Then try it out. You know, do a baby demo account or a baby live account and see what a few months of stress-free, taking a trade once every 2 weeks, once every week can actually do for your lifestyle. Because it's probably a lot more than you think. But GBP odd goes on my watch list, ta-da, so we can come back and review it. GBP CAD was the other one we lost 2 weeks ago. Well, I lost more accurately. We made a lower low. 1 hour time frame, got another double bottom and a bigger one also. So for here, let me zoom in a little. Maybe, baby. Beautiful impulse, double bottom. So if we come up and break this neckline, I'm looking for the measured move based off of this formation. Right now, we don't have a reason to buy via simplicity just yet. You can see this one adjusted. Sale never played out. So if I measure this W, that's 75 pips. At the break of this neckline, 75 pips brings you all the way up here. So not a bad way to be. Anytime I'm taking a candle formation, I'm going for measured move above ADR. Otherwise, I'm using ADR. So ADR on, I better write that down or come back. GBP CAD was ADR. Gotcha. And then there was one other one, EuroCAD, but I'll go back to it. So that's that one, GBP CAD, and then of course from there, GBP NZD, odd we did, CAD we did, GBP NZD. This is a lot of pairs. Impulse, we've got our correction. I'm looking for the continuation. Simplicity signal there. Wait for the break of this fractal. I'm looking for 124 pips out of this. Really, really simple, great risk reward. Not a lot of stress, not a lot of problem. Impulse, correction, continuation. So even from where price is currently at, really, really easy to follow trade back into right where prices stopped before. That makes trading super easy. And this is the least stressful thing that I do. Like,
That's a great trade, Jenny. I mean, that's easy. You're right. I mean, it's a no-brainer. Absolutely. Yeah. I mean, I'm not going to say that, but yeah, that's a good one. I mean, to me, that's just a no-brainer.
right? Easy, guys.
Yeah, pretty much. Yeah. From everything you've taught me as well. Yeah, absolutely.
Well, we make scalping hard. We make, building and compounding hard. We make trading and technicals and fundamentals so difficult. And some of it is when you're in the gutters or the whatever what is it called when you're at war? Like one of those
The trenches.
There you go. Because when you're in the trenches, like it can be hard. It's a lot of information, a lot of technical stuff. But the thing about simplicity, and I think what I started loving about making those 20-minute videos every 2 weeks is this is the easiest thing I do. Like there's no nonsense, there's no nothing to even really consider here.
And by the way, you're awesome. And the fact that you said that I should be ashamed is you're right. So
What?
no, what I mean by that is I should be chiming in more and I've just been busy. That's all. Sorry.
Oh, no, you're totally good. I promise. You're good. You're good. Okay, so GBP NZD also on the watch list. Okay, these are all trades. There's 15 in total. You can't take them all, guys. When I go through these, my hope is that you're going to actually go through each of these and make your decision. You can maybe be in 1 to 2 per currency. That's the most. Probably risk less than 1% per one of these positions. And the next 2 weeks might be the 20 or 30% growth, if not more, that you were looking to achieve. Figure your risk to reward ratio is better than 2 to 1. On most of these trades, you've got a high probability of hitting 30% growth from this 1 hour of your time, give or take however long we're on here. Not bad at all if you can manage this right. So GBP NZD, then we've got NZD CAD and NJ. 15 total trades. Again, breakout, retest, we're looking for the continuation. On this one, I would go to the line chart to see kind of where my target was. My target was up here. So from where price is currently at to where price has stopped before, it's 110 pips. That's approximately 2 ADR. Great way to be. I mean, that's a great risk to reward, even from where price is currently at. This with some room, that's a 2 to 1 risk to reward. This is stress-free. Take a couple of trades. Yes, you should still learn what you're doing aside from this. Yes, you should still learn about candle formations and wicks and bodies and strategies and all that other good stuff. But you can also have something that you do in the pastime as a way to maybe build up your confidence, build up your trading skills, get a little bit comfortable. And I feel like this is a great way. So that's NZD CAD, watch list, NZD JPY. Again, huge, beautiful kind of, I think Uncle Pete calls this a SpongeBob or something like that. But we've flat topped, right? We've got kind of a triple top almost impulse. We broke out of this zone. This very well could be a spring. We might not get the continuation of the downside, knowing this is also a JPY pair. So we've got our breakout. We're currently got our correction. For this, again, I would trade a little bit safer. Like I said, with all the JPY pairs, wait for the break of this zone, which makes your stop loss bigger. But on this pair, you'd have to trade a little bit more protectively. So from the break of that zone to where price has stopped, you're still looking at 2 or 3 ADR on this pair. 2 or 3 ADR on all the JPY pairs. But again, go to the line chart if you're not familiar. That's all I would do. I wouldn't be taking this much further than here. It's 170 to 270. So anywhere in between these two areas, plenty of pips. Plenty of pips. I don't know that we're going to get down to here. We've got way too much potential on the other side. But we'll see. This is an enormous move that hasn't been retested. So even a 50% retracement on this big move is going to give you enough to get your ADR. So that's that. Hold on, did I catch them all? Let's kind of find out. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15. Ta-da. Okay, that only took like way longer, double the time that it usually takes me to make these little videos. So I know I see a couple of hands going up real quick. Again, guys, if you're watching this on YouTube, this is not meant to be super technical or super difficult. This is meant to be super simplistic, super simple, right? Super easy. You cannot take all of these trades for various reasons. Number one, your account can't handle it. Number two, you shouldn't over leverage per currency. And number three, it's a very heavily weighted news week. And actually, I forgot to mention earlier, we've got this 3 weeks worth of weird time zone stuff with the daylight saving time being off in different countries. It's gonna throw off the rhythm a little bit. So with that all in mind, trade it carefully. Don't risk more than 1 to 3% per trade. Pick 1 or 2 per currency and see how it plays out. Do it on a demo and then come back and say, hey, I love it, I hate it. It's okay, you don't have to love it. Find your own way. This is just one of them. So, Nabel, you had a question?
Yes, Miss Jenny. For your ATM, do you have the same setting as the SOP scalp swing settings?
I do. I'm using something pretty comparable. So for my ATM, let's try this again. Oh, scalp swing settings. Actually, I think I'd want to check a different broker. Hold on. I have to stop sharing my screen. Y'all know why. For just a second. Nope, not that one. Let me check. Let me tell you more accurately because I don't want to fib to you.
Yes, ma'am.
Okay, hold on. Not this broker. Minimize, minimize. And I just updated them too this weekend because of the updates. So SOP scalp swing, that's what I was using, yeah.
Uh-huh. Oh, SOP scalp swing. Oh, so it's the same setting as the morning classes?
Well, I probably loosened them from when you and I last talked, but to kind of give you an idea.
Mm-hmm.
So let's use this as an example. I'm going to go to visualize. This is kind of what that would look like on the 1 hour time from for NZD JPY. It'll get me 48 pips on this one. Let me hit escape. I'm going to take profit 9 in total, 9 ATR on this, which would follow suit. Let's see, the ATR is 8. I can live with that. That's 1 ATR, 1 ADR. So it's a 1.2 ADR. That's what that would get me without a reentry. But I would be using like the golden strategy to get my reentries if I wanted one. So
Okay, can you just scroll through the trail stop and the exit method so I could just update my ATM as well?
yeah, but ask me again tomorrow too, because we just updated these literally and I haven't even used it yet. So from general,
Mm-hmm.
settings, ready?
Mm-hmm.
Remember, we're increasing this to 50 I know that for sure. We've already increased that to 50. To
Oh,
kind
you
of,
are? Oh, okay.
well, remember a while ago, Scott and I were testing like the 200
Uh-huh.
because, well, I was more accurately testing the 200 because I wanted to normalize it from the fluctuations from consolidation and huge moves. 200 was too big. Right now, this isn't going to change a lot, but it will change some. This will make a change. So to show you here, watch. Let's go. I'll put on visualize. I'll lock it. So put on visualize right here, for example. I'm gonna hit lock. So
Mhm.
with it right now, that got me 61 points. If I change this to 14, it got me 53.
Oh, I see. Okay, okay.
That was great dialogue too. I'm not always there, but you and Scott have been like brainstorming like crazy, and I do appreciate it, and that's insane. Like it's really cool.
We do make a great team, don't we? I'll have to say,
Yes, you do. Absolutely. Yep.
I'll make sure I tell him you told him that too.
All right. Hopefully, yeah, exactly.
Okay, so here we go. This is the first setting. Remember, I'm multiplying my spread mostly to give room. I'm trying to think, manage all trades. We just updated this though, so let's take that with a grain of salt. I know he just increased this. Normal broker stop loss, I don't hide my stuff. Stop loss, fractals back is 4. On this strategy, you need more, or you need to put this on the 4-hour time frame. So like I would put, if I'm managing my trades for simplicity, I have that chart on the 4 or the daily. That's going to give you a lot more room to kind of give you an idea because you just
Gotcha.
need. So don't leave it parked. Just like for my scalping, I leave mine kind of parked on the 1 hour. And then
Mhm.
I'll around 1 hour to 15 if I'm doing the 1 minute, but 1 hour if I'm doing the 15 minute. Same kind of concept. I'd be using the 4 hour or the daily if I'm doing the 1 hour on simplicity. That's going to give you plenty of room, and it's going to put your stop loss up here right where I said it would be, plus some room, plus 2 times the spread. So
Gotcha.
loss is there, trailing stop, Johnson channel 55, well 5.55. You know, like my weird numbers. I'm a weirdo.
Yeah.
Take profit 1.25. Remember, you can adjust this. Some people have got this as small as 0.75 ATR. So that's going to be, play with it and get comfortable with you. At the end of the day, this is still your journey, not mine. And the other thing I'll tell you is, and well, I think you've been around a little bit longer. A lot of people are having a lot of success skimming out of way more sooner. I'm very comfortable and confident in my entries. So I don't want to scale out of that much too quick. I want to scale out of the majority of my trade about 3 ATR. And that's really comfortable for me. I'm very, very happy with, because you got to think 65% of my trade would be closed at 3.3 ATR. On the
Right.
full frame, that would mean the majority of my trade is closed at about 1.25 ADR. And I'm really happy with that. The rest of it I let run. Sometimes I hit this, sometimes I don't. I don't care either way.
Gotcha. Gotcha. Thank you so much.
An exit method.
Oh, wait. And the exit method. Yes.
So this is a little tighter. This is going to chop you up, especially if you did not wait. If you took it here and you got the pullback, this is going to chop you up. That's why it's starting a little bit too soon. So same thing here, play with this, depending on where your entry is. If you wait for the pullback and you're getting the better entry, this is fine. If you're taking the later entry, loosen this. It'll be too tight. So too tight.
And then for the ATM, did you update the expert and the file? You have to update both of them?
You do need to update both. So I think, remember, I just did this.
Mhm.
And that when he sent out the new code for November,
Mhm.
I just updated it. So he's got the new expert advisor. I am just now starting to test it on a baby live account. So I just got it downloaded. And then this, I think, is 0.05. Don't quote me, but let's find out together. That's 0.04. This one's not even, this is not even the most updated one. This has still got a new update, doesn't it?
Yes. Yeah. That's the old one, I think.
1.05. Well, this didn't have a glitch on my end. 1.05 was only for the people who had the glitch with the broker.
Oh yeah, I don't have a glitch either, so.
That's why I didn't update it. So this was fine for me, but it should, in theory, we should stay true to form and fix anything that needs to be adjusted.
And for the simplicity, what's your trend period?
Let's find out together.
I set mine at 7.
7 is too fast.
Too
Well,
fast?
this is set to a little lower. So you're going to get a lot of those at 7.
Mhm.
let's discuss. So I'm super open to having this conversation. Like, so if we had it at 7, you're gonna get it faster, but you're also gonna get a whole heck of a lot more of them. So the blessing to that is you're gonna get in earlier, potential to scalp the market a little bit. The downside is you're probably gonna have 6 or 7 entries here, whereas I see one viable entry. I don't. This is, well, maybe 2 with the 2 buys. This right here is too close to structure for me to count it as valid. Remember, I only am going to trust the signals as a reversal signal. I'm never going to take this one. I'm never going to take this one, ever. Because this is a reversal signal system, and if you know that, you know how to use it.
Gotcha. Well, I use this parallel to the golden ticket, so I also make sure everything lines up on the golden ticket.
Then I can see why 7 would work for you.
Mhm.
There you go. 7 would work, 7 or 8. I mean, do you get a lot of repaints like this?
A couple, but I also, yeah, like I said, if the golden ticket looks good, then I'm taking it.
Fair enough.
That's interesting. No, yeah, that's interesting. But yeah, I hear what Jenny's saying as well. You know, like like I'm not using simplicity anymore, but like I have it when I threw it back on recently. I have it at 20. I think a little bit differently, I guess, about things, but I kind of see why Jenny has it at 20, and I probably can't verbalize that well enough, but
You're okay. Mine
I
is
don't know. Yeah.
lower. It's
I'm
just
also a coder too, so it's different. Like I do look at things a little bit differently. I don't know, but yeah, I kind of get why Jenny has it at 20,
7's
but I don't know for sure. So
That's okay. I feel you, Lucas. I clearly agree. Mine's at 22. So
yeah, it makes more sense to me, especially on the hourly time frame. So I think it makes more sense. It's just easier. I mean, it's just easier
it is definitely.
for that kind of just for this kind of call. So yeah. Anyway, but it's a good question for sure. I'm just thinking now. Anyway,
You're good. I think out loud all the time, hence the reason I'm here.
I know that.
Right? That's so facts.
By the way, I have I will send you some cool stuff.
All right, awesome. Thank you, Lucas. I appreciate everything you do.
Yep.
Okay, so does that answer your question? So practices, now remember, if you're doing it once a week, the one thing I will tell you, because you're used to like getting in and out of the market, or like you pretty much know your trade results like within reason within the next few days. This system is going to be a little different. Sometimes you'll be holding that trade for a week and a half. So decide if you're going to trade once a week, once every other week, and be willing to miss the trades that happen in between, and decide, okay, I'm going to do this for 3 months and see what my overall collected pip value is. Just like I always say, back test it 3 months, forward test it a couple of months, especially if you're doing it this way. And you'd be surprised. It's a really stress-free way to go get a couple thousand pips. You don't even have to know the stuff. Lots of stuff.
Appreciate it a lot.
You're welcome. All right, Mark, you had some questions. Your hand was raised. I saw you. I think you disappeared. Sorry.
Yeah. I'm good. I'm good with the questions. Thank you.
You are welcome.
Just
Okay.
curious, do you have a couple of pairs that are like number one out of the 15?
Absolutely not. Well, I'm a little biased on the JPY pairs, so you probably should not talk to me about that. The GBP CAD is, we've been rearing down, so we've made another lower low. We break anywhere in this fractal. I love GBP CAD. I love Euro CAD. A lot of consolidation. You potentially can tighten the stop loss on this, and I don't mind you having a tighter stop loss, provided you're willing to get in and out. Like tight stop losses work perfectly for people who want to get in and out, and they can mentally and emotionally handle it. But people who have the tight stop losses, and then like they take that loss, and then of course they're hurt, they're frustrated, they're like, I'll never trade again. This is not for me. This industry is a scam. Nothing works. My whole life sucks. That person probably should just have a really big stop loss and trade accordingly. So depending on your personality, you can take these are going to play out within the next 7 to 10 days, 7 to 18 days more accurately, but with NFP Friday, figure 7 to 10 days is a really good area. So you might be able to catch many of them if you just check this once in the morning. Once, don't overcheck it, because then you're going to get yourself confused and lost on 15 pairs tracking that many moves. But zoom out, make it ugly. That's what I would do. Get a bigger picture. Take the ones that are happening now, keep this rolling list of 15, and see how many of these trades you can catch within the next 3-week period of time that potentially could equal anywhere from 500 to 700 very easy pips. So they're not all going to happen at the same time, is why you might be able to catch more than one. You might be able to catch Euro CAD and not have to worry about GBP CAD, because this one stays a little bit still, makes a slightly lower low. You know that you're looking for this to happen, even if it's not ready yet. You might catch Chef JPY. I'm waiting for this stinking thing to come down for various reasons, but this might happen before we get the NZD JPY, right? Or vice versa. This looks like it's going to happen before Chef, unfortunately, for me. But either way, this could happen first. We're still waiting on this pullback to complete. Maybe Chef JPY stalls out a little bit. There's a decent probability that you can get 8 to 12 of these trades. I mean, and you wouldn't even have to be in at the same time if you were actively checking once to twice a day. You're actively managing and protecting. You know, like, I wouldn't unnecessarily cut my losses, but I would protect my profit. Because if I'm in, last thing I'll tell you, in the Super EZ group, there's a file I wrote a couple of years ago. I think it's called Rules for Trading or something along those lines. And how I manage stuff like this when I had this many setups in 1 week, because it did happen. It's happened maybe 5 or 6 times in the last 3 or 4 years. What I did was, I can be in 4 or 5 at a time, right? That was my rule for myself. My next rule was, if this trade had been protected in profit, I can be in another one. So that means instead of 5, I could be in 6. So if I had at least 3 of those protected in profit, I could be in 3 more. Make sense? Because then I don't have the same amount of equity or risk to my account. 3 of those trades are protected in profit. I'm letting them run, and now I've got 3 more on the table. If those next 3 I can protect in profit, cool, I've got them protected, or I've scaled out of the heaviest portion of that position. Now, cool, I can go get the other 3 that they're now setting up.
Did you see a trade that you thought was your favorite, buddy, at all? Because I mean, it took me a long time to even think about that stuff. Do you see one that out of the 15 that you thought was your, whatever, brilliant or whatever? For me, it was Gian.
Yeah.
And like Derek says all the time, right? But 15 trades is great. I mean, it's awesome. And I mean, it's even too much for me to comprehend as well. But, don't get overwhelmed by it, and just keep listening to Jenny. That's the best advice I can give, and
Pound New Zealand.
he gave a bunch of good stuff right there.
You said pound. Thank you, Lucas. You said pound New Zealand.
Yeah.
That's what I said. Yeah, that was my favorite. Yeah, that's my favorite. And we'll talk about it next time. But I don't want to keep you. I like that gap right there. I like that. Yeah, I like that entire break, I think. I'm Jenny, you call that for a buy, right?
Yeah.
Exactly. I think it's beautiful. That's a gorgeous
I was
trade.
like, why? What do you see?
No, I see a buy. Like, straight up.
All right, Mark, what do you see?
Oh, I see a buy also.
Just based off of simplicity, or what other reasons do you say it's a buy?
Well, we're bouncing off the bottom there, and we've had a pullback. I may wait for a larger pullback before I get in.
Okay, so just based off of simplicity, kind of then?
Well, also we had a nice, downtrend, and it looks like it's U-turning, bouncing off the bottom.
Okay, so let's discuss that for a second. If this was our impulse, this was the correction. We've already corrected 38%. I mean, I can't swear to it, but I promise you I'm pretty close. And that's 38%. There you go. 50% even.
Right.
Depending on how and who measures it. Okay. So we've already got our impulse, correction, continuation. So now we're waiting for this to kind of come up. So that's one thing. Another thing to look at is the most recent largest candles. The most recent largest candles are momentum candles. We've got a nice push here. These are all buys. This big sell-off. Notice the size of these candles. They're all really small. That's the market is losing steam, kind of like what happened over here for consolidation.
Mhm.
Really, really small candles. This is kind of a descending channel formation. Lots of dojis, lots of wicks in both directions. We've got a gap here, technically speaking. We've got a lot of correlation inside candle formation here. That's a reversal indicator by itself. We've actually
Right.
got some divergence for those people who use oscillators on this pair. A lot of correlation. We broke through the 50, came back down, retested the 50, looking for the potential continuation. So at the break of this wick, we had a really,
Hmm.
I like this one. There was another one that had a really strong move. There's so many today, guys, that I can't even tell you which one. GU, Euro Chef. I like the formation on this one. Right shoulder's a little ugly. A lot of traders are going to sleep on this. Break of this is going to give you enough of a move. I like this one based off of candle formations. Beautiful, kind of nice move above the 50. Came back down to retest. Which one's my favorite? GN's pretty. I like GN. Still waiting on the JPY pairs. Euro N also had that impulse, but what we're calling impulse technically was that NZD news that happened a couple of hours ago. So we have to take that with a grain of salt also. We had big red folder NZD news a few hours ago. So that's why we're seeing this impulse. It's
Right.
from nowhere, so. But okay, that's that for today, guys. I don't have anything else. Like, if there's something specific you guys want to know about trend lines, you want to know about any one thing, by all means, this is your moment. That's a lot of pairs for those of y'all who are in the morning class.
Jenny.
Hey, Donna.
Hey, there's a question from YouTube from Ernest. Sorry. Says, Jenny, did you say the ADR indicator you are using is part of the Swiss Army knife? Is it a different one than the one in the We the People group?
Great question. So the ADR one in the We the People group is the same. It's called the bar alert. There's many versions free all over the internet. Just look for ADR indicators. The one that I've used the longest is called the bar alert. Also, in addition to that, the Swiss Army knife also has it. I think he just revamped this today. So I think the information is going to be a little clearer based off of some feedback he's gotten. But this also gives you that same information for those of you who have the Swiss Army knife. So the answer, I think, to that question is both.
Okay. Now the ADR, I know there's the bar alert, and then I know there's the ADR where it shows you the high and the low.
That's the ADR high low. That's a different thing.
Right. So, okay, well, I'll message him to clarify.
All right, thank you. I appreciate you. All right, anybody else who's got any questions? Mark, how long have you been trading with Simplicity? Or in general?
It's probably coming up on, I think, around 10 months.
Nice.
Yeah.
And do you like
Different
it?
way, a whole different way of trading. So I had to kind of like conform to it, compared to what I was always a Fibonacci trader.
Oh, you're that guy. Okay. Did you have any success with Fibonacci?
Yes, very good success.
Well, maybe you could teach me a thing or two about Fibonacci, because anybody who knows me knows Fibonacci. I'm a numbers girl. Like, I love all the weird number stuff, but I don't love Fibonacci. I just don't love it. And these boxes, as you know, are built off of Fibonacci, right?
Right.
But the reason I don't love it is because if we measure this move, and everyone measures it from slightly different places and highs and lows and
Right.
overextensions and underextensions. But here's the thing. So if we move to here and we're measuring from here, of course, that's a 20% retracement, but then price keeps moving up. So if
Right.
price keeps moving up, of course, this is a 20% retracement, and then this is a 20% retracement, and then this is a 20% retracement. So for me, I feel like not Ichimoku, but Fibonacci is one of the least consistent things ever. And I know God forbid, YouTube's going to hate me for that, but honest to God, I'd much rather use quarter points. Those are stable. Those aren't subjective, and they're stable. They're not perceptive, from individual to individual. They're stable. They have a value, not just a perceived value. That's my opinion. So
But I find the market does conform or it reacts to the Fibonacci retracements and extensions.
okay, so ready, let's go to Chef, because this is my controversial pair of the evidently the month. But okay, how would you draw this Fibonacci on here? From here to here
Lowest low to the highest high,
on screen, which is this, right?
right?
So on screen, lowest low to the highest high.
It's so subjective. I agree with Jenny, but
There you
it's
go.
fun.
Right? So this is if we look from here, this looks like we've already made the 21% retracement, right? But
Mhm.
this wasn't the highest high when we were here. Does that
Right,
make
right,
If we were to, that means we'd have to draw it again and say, okay, so now we're here. The 21 from here would be down here. We've never hit that, right? I
right.
feel like it's, so what would you do in this case? If you're
First of
open to
all, I would go to a higher time frame.
okay, delete all that, all those off. There we go. Daily time frame, okay?
Daily.
Okay, we're on the daily. Now
So
what? This move?
you could take that move. That'd be perfect.
So, but remember, when price is here, this is the high. When price is here, this is the high. When price is here, this is the high, and so on. But okay, so now we're here.
Here's your high, right?
Yep. So now I'm
Okay,
looking for it to come down into here. Yeah.
right. A 382, 23%. Kind of right there, right where you have your pointer.
Yep. This is where I'm looking. It's just one of those things. Like, I know some really successful traders who see Fibonacci in a way that is, first off, it just humbles me to pieces. I don't obviously see it that way personally, and I
Well,
know.
also the difference is, Jenny, you're trying to teach a lot of people and you repeat that over and over. And that's why we love you. So
Well, thank you, Lucas. Yeah.
Well, you could always break it down to a 15-minute, 30-minute time frame and find the next Fibonacci, whether that be up or down. And you'll see the market does go to the extensions and retracements, like almost to the pip.
But is that in hindsight or is that forward trading?
Both.
Hmm.
You have to, I don't know, go to some different time frames on your own and try it out, and you'll see. Wow, it's almost to the pip.
The whole concept with Fibonacci is it's based off of from where price stops and starts, right?
Highs and lows.
Right, highs and lows, where price starts and stops. So with that concept in mind, since no different than a reversal indicator, since we never know when the high is done being high, when the low is the low, that's what makes it such a moving target. Like, so I tried really hard to get good at it, probably for a good year and a half, and we all have our strengths. It's just not mine. I would love to learn more in a way that I could duplicate it, but if I can't duplicate what I'm doing, it's not a viable option. So
Right. Makes sense.
that's awesome. If you can make it work with simplicity and use it as your targets, like I don't know how you're using it in conjunction with simplicity or if you're still using it, but by all means, come on out to any one of my classes and let's talk. Like I'm
Okay.
super open to, learning different things and discussing, uh, differing perspectives. That's how we learn. That's how we cultivate different new ideas and hopefully gain from each other. And I feel like it's an awesome situation. So.
Great. Okay. I can even send you something.
Okay, by all means, I'll read it or watch it. I'm a trader, so that's what I do.
Great.
Read and watch. I definitely will.
Okay. Thank
Uh,
you.
You are welcome. Thank you for coming and hanging out for a little while.
My pleasure.
Okay, so I'm checking the chat real quick. When using so Ken said pull from the top to the bottom, Jenny. So on this move, pull from the top to the bottom. Ken said that's a 0%. So that's how you would do it, Ken. See, the different ways of doing this, guys, it varies from person to person and lesson to lesson, teacher to teacher. But top to the bottom, It retraced to the 61.8. I would love to see that retracement personally. That would make me a very happy girl. Very, very happy.
I've written a lot of code, you know, and back tested a lot of this stuff. And all I'm saying is you know, I don't know. I'm not a huge fan, but you know, it's real. So.
Hey, Lucas, have you had any wine tonight? Like, we're all friends.
I have, and I haven't in a while. I'm sure you can tell. I'm sure Donna knows too. But yes. Anyway.
Well, next time you bring wine to the party, let us know so we're not the only, you know. No.
Is there like, hang on, by the way, is there some cruise thing going on or something like that?
Yeah, I'm gonna plan a big vacation with all of us. So I'm looking at April.
All right, cool.
We might
Nice.
be like we might do something land on the land for the time being. Obviously, cruises are great because they're kind of all inclusive.
Yeah,
But some
whatever.
people don't have passports, plus the COVID stuff, and then the anti-vaccination group of people. There's so many speculations that I want as many people to come as possible. So Florida is still nice in April. I'm a little biased, obviously, because I'm local. But anything south, odds are we're picking Florida just stateside for the current time. Hopefully, as COVID stuff wears down, I want to see all of my people with their passport stamps right next to me, and in Bora Bora and in the Maldives and just all over the world. In Singapore, we got to go see Kat.
Oh, we got to see Kat. That's true. That's
there
true.
you go. So that's
Nice.
my goal. We're not there yet.
I'll start simple. I'll follow you wherever, Jen. So it's all good.
There you go. Sounds great. Next time you're having wine though at night, make sure you tell me so we
Right.
I'm like, is he a little drunk? I'm not sure.
Yeah, I had a couple today. Yeah, I did.
It's okay. I won't judge you, I promise. So
Thank you.
okay, so Ken says to see the extension target. Yeah, mine's not built for that. It's kind of built into the same thought, impulse correction, continuation philosophy. Again, Ken, I'm super open. What we do in the morning times, guys, is we discuss all kinds of various ideas. Like we hang out. Yes, of course, we look for some trades, but we talk like as equals amongst people. So you have an idea, like by all means, let's come out, let's discuss it. You might not always see things the way I see things. I don't need you to. At the end of the day, I need you to see things the way you see things to be the most profitable for you. And I just want to do that together, right? That's all I'm looking to do. Whatever works best for you, I'm super on board for that. Whatever works best for me. And if I can learn and or help others learn, that's a win-win-win-win. So Herring said, when using the ADR on the 5 minute to scalp, what's the way to keep the tight stop loss when looking for buy or sell? I think you're referencing our scalping stuff from this morning. Can you clarify, Herring? For me, pretty please. Swing highs and swing lows. Dorian calling you up. I haven't heard from you in a while. Hope you're doing well. It's kind of built around the same thought process. I know it is. It's just one of those things. I've missed you. I hope you're doing super well. I got those DMs. All right, guys. Hey, that's enough for tonight. If you guys are actually going to communicate and hang out, then by all means, I'll go live. If not, I'm totally doing a 20-minute video. I'm going to go on with my night and then show you guys some trades. But tonight I wanted to show you that there's a lot of setups happening. So don't be greedy. Please know that it's NFP. Please know you can't take them all. Pick some, put some in your demo, or create a system. Like I'm a systems girl through and through. I'm a spreadsheet girl. I'm proud of it no matter what anybody has to say about it. So get your spreadsheet out, make your plan of action. Say, I'm going to take these. Once I'm in profit, if these are setting up, I'll take these. Once I'm in profit, if these are, this pulled back, I'll re-enter these, and have a system in place and rules. Don't just do it willy-nilly because that's a recipe for losing. But I promise, you'll get really far. A lot of potential pips on the table with these moves. So excellent tutelage tonight and insight into possible setups. Thank you. Thank you, Ken. All right, guys. Donna, nothing else on YouTube?
No.
All right, awesome. She's the boss of that. So thank you guys all for coming to hang out. Again, next Tuesday, if you get, well, not next Tuesday, but the Tuesday after that, if you guys are wanting me to go live with you and you have questions, comments, pairs, by all means, let me know in advance by a day or two, or in the chat in Super EZ. Make sure you tag me so I get the alert, and then I will. Otherwise, we'll repost the follow-up to this. That's probably going to be a long call, y'all. 15 trades. That's nuts. So
That's super fair, Jen. We love you and thank you for your time.
Yes, thank
For
you.
sure. I mean, seriously. Yeah.
good night, Lucas. I hope you're doing
Bye, Jen.
Thank you, everyone. Thank you, Dorian. Thank you, Mark. Thank you, Donna, Ken, everybody who participated. Have a wonderful evening. Take care and God bless.
Thank you.